Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is David Beahm. He serves as the President and Chief Executive Officer for Blanchard and Company, Incorporated, which is one of the longest operating and most respected precious metal firms in the United States. In his role, David leads the company's strategic vision, drives innovation across operations and client services, and maintains a strong emphasis on trust-based long-term client relationships. David is widely recognized as a trusted authority in the precious metals, wealth preservation, and financial market structure. He has been featured by the New York Times, the Wall Street Journal, Smart Money, and other leading publications. David, I'm looking forward to our conversation today. Welcome to The Wealth Flow.
Hey, Keith. Thanks for having me on. I am too.
Yeah. I always love to start with your background, what you did maybe before precious metals and what led you to having a profession in this industry. So, David.
Sure. So I'm born and raised in New Orleans, Louisiana. Went to Newman, and some of your listeners may know Newman. That's where the Manning family is from, and I'm sure everybody's watching Arch and looking forward to his next season. So that's my claim to fame from a high school standpoint. Went on to college, and I graduated from local University of New Orleans with the hotel, restaurant, and tourism degree. I figured if I'm going to live in New Orleans for the rest of my life, I might as well know something about the hospitality industry. For those that you have been to New Orleans, you know that we rely on that almost exclusively, that and oil. From there, went on and got an MBA, and then started my career in banking. So I was a commercial lender at what is now Hancock Whitney, one of the largest banks in the Gulf South, and was a commercial lender there, and moved over to Blanchard and Company. I happened to be lucky enough to marry into the Blanchard family, the ownership at that particular time. So my wife's father owned the company. He had bought it from Jim Blanchard, who was the original founder, founded the company in 1974. And I basically started in the vault operation and moved to our wholesale division, then client information, then finally became the director of marketing. And it's during the time that Katrina hit and wiped New Orleans out for a bit. So I was responsible for building or rebuilding the company in Dallas for a little while until we moved back to New Orleans, and then took the role over as president, and then added the CEO to the title after that. And I've been in that position for about 10 years, and now been with Blanchard for roughly 25 years or so, and seen the market, go pretty much the full spectrum. We went through the financial crisis and saw gold perform exactly like it was supposed to, and then climbed out of that, and gold was kind of boring for a number of years. And then COVID hit, and it was exciting again, then boring, and now, right now, as you just noticed, the last year or so, the price is up substantially, even though we've had a little bit of hiccup over the last week or so. But we're up probably 50% or so since not last year. And that's the background. So, Blanchard as a whole, We are a full service firm. We've got offices here, Charlotte, Jackson, Mississippi, the North Shore, and in Tennessee and Dallas. So we're a national company, but our headquarters are in New Orleans.
Okay. No, that's great. And good that you got back to New Orleans after Katrina. I know a lot of it displaced a lot of people, and some of them never came back. So it's good that.
Yeah, we were lucky. We actually opened an office in Dallas, and some of our employees that moved from New Orleans to Dallas chose to stay there. So we had a captive office to begin with, and we're lucky enough to find some great talent in Dallas as well. So for us, it really worked out, and that was kind of the start of our expansion plan. So Katrina, while was devastating to our city, was certainly the silver lining was we were able to expand and grow the company in terms of physical footprints.
Yeah, exactly. Okay, well, let's maybe just for the audience start with kind of why would somebody want to invest in precious metals, and then maybe some of the options as well. But obviously, we've got folks who do a variety of different investments. Why would they want to make at least a portion of that, investing in precious metals?
Sure. I think if you don't mind, I'm going to go back a little bit further than that and talk about back in 1933. For your listeners, that was when the United States decided to confiscate gold from all citizens, individual investors. So in 1933, you literally lined up and you exchanged your gold for cash. And between 1933 and 1974, it was illegal for you and me and your audience to own gold. And it wasn't until 1974 when President Nixon took us off of that, and we were able to actually own gold, and that's when Blanchard started. And an interesting side note is our founder, James Blanchard. He actually hired a plane that had a banner that said "Legalize Gold" and flew it over Nixon's inauguration. And that pretty much started you and me and the rest of the people that wanted to invest in gold be able to do that. I would imagine these days, if you try to get a plane to close to the inauguration, you probably would be escorted down by a couple of F-14s. So that was basically the start of not only Blanchard, but most importantly, it was the start of the retail investor being able to invest in gold. And at that point, he started Blanchard, and really wasn't a known asset to have because nobody really thought about owning it. So it really did take a lot of education, and I think we're still trying to make sure that when we talk to clients that they know what they're getting into. The most important thing that our firm offers, is we don't just sell gold to somebody. We're looking to build a relationship, and what we want to do is figure out what the goal is. And there are different goals for different investors, as you pointed out. People have different goals. People are at different stages in their life, and all we want to do is make sure that we know what they're trying to accomplish, and then we can put them in the right asset. Everybody talks about gold and silver, but there's certainly multiple ways of getting involved with gold and silver. Once we determine what the goal is, then it's one of the easiest assets to invest in, and I think it's a little bit scary for people that don't know, because if you go back to college, on the last day of economics or finance and investment, they mention the word gold, and then class is dismissed, and nobody knows how to do it, but everybody knows how to invest in stocks and bonds. So it's as simple as you really just call Blanchard up, and we have portfolio managers, some of that have been here since the inception of the company, and we get to know you, we get to know your goals, you fund the account, and then we discuss what options there are out there, and then we strike the price. And the most important thing about Blanchard and about physical investing is we actually deliver the precious metals to the buyer. So once you decide what to buy, let's say you buy, $100,000 worth of gold and silver, a mix of it, and all of a sudden your doorbell rings and there's a package there, and you open it up, and that feeling that you get when you hold something like that in your hand, I'm probably dating myself, but you feel like Uncle Scrooge. You have all this gold in your hand. You feel like, it's something that is not only just tangible, but it just makes you feel like you have a little bit of power because you control that. And that physical gold is so much more of a proxy than a mining share or an ETF ETF or a future, you can enjoy the benefits of gold by owning any of those assets, but you're exposed to, what if the mine collapse? What if the government decides to take over the mine? What if the ETF gold isn't there? And I'm not saying that some of those ETFs loan their gold out, but there's certainly rumors out there.
Right.
And in future contracts, you have to have an obscene amount of money to get involved with that. So the true proxy is to own gold. So once you fund the account, the number one, the most popular investment out there is the 1 ounce gold American Eagle. And for us in New Orleans, it's about the size of a Mardi Gras doubloon. So it's easy, it's portable, and it's something that our clients. I would say that's the number one gold product that our clients buy, most importantly right out of the gate, because it's backed by the United States government for weight, content, and purity. So you know exactly what you're getting. You can feel confident that you're getting 1 ounce of gold.
Okay. No, that's and how about is there a difference? Is there other ways to invest in the 1 ounces of gold beyond the coin? I mean, can you do just 1 ounce bar, or what does that look like? Or is it maybe the bars don't come in 1 ounce size?
Yeah, we have gram bars, so we can get pretty low in terms of dollar amounts. We have 1/10 ounce gold pieces, 1/4 ounce gold pieces, 1/2 ounce, 1 ounce. And then the bars do start at 1 ounce, and then they go all the way up to 400 ounces. And I was just watching Die Hard with a Vengeance, and if you remember that movie, they stole all that gold out of the New York Fed, where all the gold was, and those are those 400 ounce bars that I'm referring to. So there's all types of sizes, price points, and it's really the comfort level of the investor. And Blanchard is not one of those firms that's going to say, look, you need to liquidate your entire stock portfolio and invest in gold. I think the most important thing for investors to realize is that you just want a small allocation in gold, 5, 10, 15%. And really what you're doing is you're protecting yourself with that type of asset. And so regardless of the dollar amount that you spend, we'll sell a Silver Eagle for now $70, $80, and all the way up to 7-8 figures worth of gold. It really just depends on the appetite of the investor. But the core goals are to protect yourself, have that insurance policy that you hope that you don't need. You look at the markets today, and the stock market's up huge, and gold's taken a little bit of a hit backwards, but that's what's supposed to happen. It's an inverse relationship. And on those days when the stock market's down and you have a little bit of gold in your portfolio, things look a little bit better. So it's just that insurance policy that I think most of the investors are looking for, and really will help navigate the actual product type itself based on what the goals are.
Yeah, makes sense. Well, let's maybe take gold, and we can maybe do this with all of the precious metals that you all offer. But from a gold standpoint, you mentioned that you actually take possession of it. Maybe if you can talk a little bit about historically how it's performed, kind of where it is now with respect to where it's been even just 3-4 years ago. I mean, it's still considerably up, but yeah, if you can talk maybe a little bit about that piece of the puzzle, and then, how people can invest, what, do you offer any kind of storage? I know some of the gold, providers will offer storage beyond, kind of taking possession at the house. So any of that, that you can talk about with gold would be great.
Yeah, certainly. From a storage standpoint, we start there. So we've partnered with depositories around the world. So some of our clients don't want their metals within the grasp of the United States government. So they want it in Canada or in Europe or Asia, which we certainly can facilitate. But the two primary places that we partner with is one in Delaware and one in Dallas. And we're basically shipping stuff there and receiving stuff there on a weekly basis. And it's available 24/7 for our clients. So when they need it, they just call us. And if they want to go pick it up, we can tell them, hey, go knock on the door. We'll have everything ready for you. And they give it to them and they walk out with it. But more importantly, when they're ready to sell it, it literally just moves from one side of the vault in those areas to another. And then our clients get a check. So it's very easy to, if somebody's uncomfortable having that type of wealth in their home or safety deposit box, we certainly have a variety of options to help with that. Um, these clients are, the price of gold when I started here was below $1,000. And, it's one of those, assets that you can go all the way back in time to the Roman era, and an ounce of gold pretty much bought, and you may have heard this before, it pretty much bought a very nice suit, no matter where you are in the lifetime of gold. So, even today, a $4,500 suit is a very nice suit. And, basically
Yeah.
gold keeps its value. And that's the most important thing. It doesn't give you that quote return that everybody's looking for. But, we have this saying here, don't worry about the return on your gold, worry about the return of your gold. And what
Yeah.
that means is, yes, you might have a dividend stock that pays well, but all of a sudden during the financial crisis, it didn't. And you woke up on Monday morning and things look a lot different than it did on Friday night when you went to sleep. And some companies that you invested in didn't exist at all. So we want to make sure that, yes, you're right. It doesn't have a return, doesn't have a dividend. But what it does do, it gives you that comfort level. And so as you kind of go through the evolution of gold since 2000, when the 1999 to 2000 time crisis happened, gold started getting a little bit of interest, and then all of a sudden the financial crisis hit. And if you look at what happened with gold during that period of time, it acted almost as perfect as you could have. So gold is a liquidity, a liquid asset that provides liquidity to institutional and retail investors. And in 2008, during the financial crisis, gold went from $900 to $700 in about 60 days. And why did it do that? Because everybody wanted to be in cash, because they didn't know what was going to happen. And I kind of referred to some of these big, large institutions that were there on Friday, and by the time we woke up on Monday, they weren't there. So everybody wanted to raise cash
Right.
because of fear. And as we navigated through the financial crisis and things started turning around, the price of gold didn't, was kind of like a level that just didn't move at all, and nobody was interested in it for a number of years, and it just kind of was an asset there. And our clients had the gold in their portfolio, and it was kind of out of sight, out of mind, which is okay for an investment like gold. You don't want to have to rely on it, but you're just comfortable knowing that it's there. And all of a sudden in 2020, the world was ending, and people wanted gold and silver again. So they took money out of the stock market, put it into gold as a safe haven, and stability, insurance provider. And then, what we've seen over the last year is kind of just a lot of glass balls that we've been juggling in the air, and they kind of slowly but surely keep falling out of the sky and breaking. And you take your pick, just turn on the news right now, and that's why gold has performed the way that it's done over the last 12 months or so. And so, well, wait a minute, got up above 5,000. Now it's at 4,600, 4,500. Like that's healthy. For your listeners, it's great because you see a correction, and it pulls people out of the market, and people can get in at a good price. So our message to our clients right now that either bought gold within the last 12 months or maybe even the last 30 days, just look, you stay the course. You're not day trading this kind of stuff. This is something that you put away. It's generational wealth that you can pass down. And, we've seen these cycles before. Gold, goes up almost hockey stick, retracts a little bit. And then as long as the trend is upwards, you'll be fine. And for your listeners that haven't invested in gold and are thinking about it, right now with gold backing down a little bit, it's a good time. It's a good entry point. Where's the bottom? As I say, you never catch a falling knife, but
Right.
you can get in, and you can dollar cost average. If gold goes down another $100, $200, perfect. We're still going to be here, and you can get in a little bit lower from a dollar cost average. And the one thing that is absent in our industry is we create that full circle. And this is for your listeners on the confidence level, is that we were here when the legalized gold plane happened, and we're still here 51 plus years later, that when they're ready to sell their gold, they call the same person they spoke with when they bought it. And we just do the same thing in reverse. So that makes people feel confident that there's going to be somebody there that buys the stuff from them when they're ready to sell.
Yeah, yeah. I mean, you look at how many countries are utilizing gold as well. I mean, there's always going to be a buyer for it. I mean, people recognize that it is a store of value, and it's incredible though to think that only 51 years ago, as you were saying, it was illegal
Right.
to actually own it. That's mind blowing to me. That was something that you just weren't allowed to have.
Yeah,
Crazy.
it was technically illegal to own it, and that 50 plus years ago, once we started that trend, we've sold over $5 billion of product in the last 50 years to over 500,000 clients, and so it's happening. What's not happening is not happening fast enough. And you look at markets like Asia, where gold is an asset that just about everybody owns over there, and just a small fraction of United States investors actually own gold. Why? Because they just don't know anything about it, and they don't know that it does provide a hedge for inflation instability. I mean, pick up the paper or turn on the news or hop on the web and take your pick. But if just a small fraction of retail investors within the United States started buying gold, the price of gold would go up monumental. And then, what you mentioned, institutional and central banks are buying gold left and right. So you almost have like a backstop of knowing that these central banks are going to buy any gold that floods into the marketplace, instantaneously. So yeah, gold goes down, but they're taking advantage of the prices just as much as our clients are. And as your listeners should be doing is knowing that the trend is upwards, and the people that are buying gold are not shying away from anything right now. They just want to get their hands on as much physical as they can.
Wealthflow audience, pardon me for a quick interruption to today's show, but I have some exciting news that I want to be sure that all of our listeners are aware of. We just launched 3 totally unique to the market funds that are at the cutting edge of technology and AI. We have combined my 25 years of real estate experience and my recent work as VP of development for a tech company to bring 3 awesome investment options to our audience. For full details, go to our website at bobocapitalventures.com. Again, that is BOBO capitalventures.com. All right, back to the show. And then let's talk maybe about, let's maybe go from there to maybe the more next most common, which would be silver. Correct me if I'm wrong, but silver and kind of what, maybe you can talk a little bit about kind of silver and the gold relationship, and kind of when silver is a good deal compared to gold and kind of what you see with respect to silver.
Yeah, so silver's got a lot of industrial use in it, and because of that, yes, they do go up in lockstep usually. I think the thing about silver that is a little bit different than gold is it's the entry point. Right now silver's trading for $60-$70 an ounce, so it can get bulky. Some of our clients that are putting money into that at $50, $100, $200, $300,000, it's a lot and it's bulky, and they've got to figure out where to go. Some of our depositories, they line the outside of their vaults the inside, but the exterior walls of their vault with silver, because it's like another added protection, because it is bulky, but you do get exposure to it. So if you're looking at gold at a $5,000 an ounce or $4,500 an ounce, and that's a little too much for an appetite, then you have silver that is it has trended upwards just like gold has, but it's a different price point, and it's the same type of ounce structure that we were talking about with gold, that we've got, so small ounces. We've got 1 ounce silver eagles that are manufactured by the mint. We've got bars that are 1 ounce, and then we go up to kilo bars and even higher than that. So The only issue is, and this is same with gold, but we'll mention it when we're talking about silver. You have 1,000 ounce bar. It's hard. Well, it's not hard. You can't carve up 1,000 ounces and say, oh, I only want to sell 100 ounces back. And same for gold. So it's all or nothing. So 1,000 ounce bar, it's a monster. It's a 70-pound bar that is very impressive when you put it on your desk and your clients come in and say, what is that? It's like, oh, well, that's 1,000 ounces of silver. But you're all in and all out. So you're buying 1,000 ounces, you got to sell 1,000 ounces. But I think what people try to do, and what we recommend a lot of our investors do, is get exposed to both metals, because they generally track one another. But there are times like today when gold's down, silver's up. And there's just a more industrial demand. There's a lot of things that silver's used for that we use in our everyday life, and I think that it is important to look at silver as kind of a partner with gold. And I'm sure you all preach diversification, or some of your guests preach diversification just about every time you have somebody on, and that's what we do as well within the precious metals complex. We do sell gold, silver, platinum, palladium, but the majority of our investors have a allocation of gold and silver, because we want to make sure that they're diversified within the precious metals complex.
Okay. No, that makes a lot of sense. And are you seeing a demand in silver for some of these other things? The fact that it has some, it's used in a lot of the various electronics. And I mean, you see and hear, I mean, if I've heard a million different infomercials on, how silver's going to take off this year or
Right.
in the upcoming years because of it. And while it's gone up, I don't know that it's, gone up as to the degree that is kind of being talked about, but I also do recognize it is being used in quite a bit as far as electronics, cell phones, all that good stuff. So what's the truth behind all that?
The people that you're talking about, and I think that there is the possibility of that. If you can't pick up anything without hearing about AI and the amount of power that these companies are going to need, and these server farms that they're building, seemingly overnight across the country, probably even across the world. And silver is going to be used in all of that. So from an industrial man alone, that's going to create a lot of physical demand for silver. Not necessarily the way that we sell it. They're not buying 1 ounce silver American Eagles, but they're buying silver in a industrial use, beads or ribbon of silver, and that's going to create a lot of demand. I mean, AI is here. We all use it daily, and it's only going to get, the use is only going to get greater, which means they're going to have more capacity, more power, more computers, more servers, more, whether it's solar power, wind power, water power, all of that has silver in it. And so it does have a large industrial demand. And as an investor, you can actually take advantage of that demand and have it. And just, again, it's that insurance policy. But then if you actually look into the future, which unfortunately I don't have the crystal ball, because if I did, you and I would not be talking right now. I'd be on an island somewhere. But if you look at what the demand is for silver in that industry, in that area, it should create a lot of new demand, and it's just going to increase. As you know, Moore's law, technology doubles every 2 years. Well, we might have to rethink that, because it seems like it's doubling every 6 months now.
Right. No, I agree. And then what about some of the others? So, and as far as it sounds like silver is kind of similar to gold in the sense that you can invest in the coins, you can invest in the bars. If you want it shipped directly to your house, you can store it there yourself, or you have the options of utilizing the storage. As you said, it's quite a bit bulkier, significantly bulkier than gold as far as the 1 ounce bar and how much it's worth, as far as as far as that goes. So, but what about palladium and platinum? Maybe we can talk a little bit about those. Those are a little less known, to most investors, but kind of the use cases for them and why someone would want to maybe invest in either one of those.
I think it's going back to the diversification word. We typically are not recommending platinum and palladium just because it has way more industrial use than investment use. But if you see the economy growing from a global standpoint, then it's certainly something that you can add to your portfolio. The other problem is the demand. I mean, the supply out there is drying up. It's hard for us to find platinum and palladium right now. And you would think, well, why isn't the price increasing? Well, if you look at the price of platinum, it has doubled over the last year or so. So there is a lot of demand out there. It's just hard for us to find the product. But also, from an investor, especially a new investor that's coming in, they can at least pick up the Wall Street Journal and see what the price of gold and silver is. It's hard to find, on a regular basis what the price of platinum and palladium is, and I think that people just would rather be exposed to a metal that they know what it is, what it's used for. Both of those other two metals, they do have a high industrial use, even more so than silver, but they do lack the investment demand. So that missing piece, yes, we do sell it, but if somebody calls us up and said, "Hey, I have $100,000 to spend," platinum and palladium would probably not be in the conversation unless the actual client themselves said, "Hey, I really think that platinum and palladium is the right play." I said, "Perfect. Look, all we want to know is what your goal is, and if your goal is to make money with platinum and palladium, we will go out and find it for you." But if somebody says, "Hey, I have $100,000 to invest, what would you recommend?" Those two metals would probably not be on the table, at least as the initial conversation. If we started going down the road and try to figure out what the goals were, and those two metals may play a role in it, sure. But for the most part, almost all of our investors, and I would venture to say from the institutional investments as well as retail investors, those two metals are probably not really on the table.
Okay. No, it makes sense. What are they used for? I mean, other than obviously, I've seen platinum rings, wedding rings, that kind of thing. But I know it's used in a lot of other stuff. Well beyond that. I mean, is that similar as far as the electronics and
It is in temperature as well. It's got a higher temperature melting point than others. So that's why it's used. And we'll have from time to time people come in and say, "Look, I've got this platinum screw. How much is it? How much is it worth?" I'm like, "Look, I buy bars and coins. I wouldn't even know what to do with a platinum screw." But it is used way more industrial. It's at a higher temp. So I think that's the allure of the metal itself from an industrial use, from an investment use. I just don't. Yeah, you're right. Wedding bands. You see platinum wedding bands. You see some other platinum jewelry. If anybody that's familiar with American Express, if you look at the way that the cards are, you have the green card, you have the gold card, and you have the platinum card, and the platinum's always been higher than gold for years and years and years, and that's why it's considered, the platinum card. Oh, that's great. Of course, they've got the black card, but the platinum card is higher level than the gold card. But I guess 15, 20 years ago, that reversed itself, and gold started moving above platinum, and it stayed above platinum for the last 15, 20 years. It's outperformed it. And part of it is, or almost exclusively, is because of the investment demand. It just has such a higher investment demand than platinum. We know that our investors are more familiar with gold, even the novice investors. And so that's why we stick with them. Stick with silver and gold.
Why do you suppose it has always had, it seems, gold? I mean, going back, thousands of years, it always seems like it's been something that has been used from a value standpoint and traded, with some form of value. But what do you think makes gold so unique from that standpoint?
I mean, if you go back years and years and years ago, people were overthrowing governments and tribes and whatever you wanted to call them way back when, and all they wanted was gold, because that's what they used to pay their armies with. That's what they used to pay to make Rome the empire that it was. And I think you fast forward that now, and it's the same. I said, what people realize from a central bank standpoint, it gives countries stability. If there's a currency out there that is announced that it's going to be backed by gold, I can assure you the dollar will lose its reserve status and people will flock to that currency. And we're like teetering on it right now. You can see the dollar has underperformed over the last number of years as the BRICS come out, and as Russia and China work together. So I do think that stability is the main reason why gold has survived time after time after time, because as we talked about, it's held its value, and it is an important asset for people to have out there because it does provide that insurance policy, and that's what it's done for years and years and years. In worst case scenario, you can still buy stuff with it. If things get really, really, really bad around here, you can show up to the grocery store and throw some silver or gold on the conveyor belt and buy a loaf of bread with it. So not only is it from an investment standpoint, but it's money. Gold is money, and sometimes we forget that, and we shy away from gold because we don't understand it. But truth is that it's been a form of currency and money for thousands of years, and it still is. People trade gold for oil right now. That's a currency. So what happens if that currency becomes more mainstream and people don't trade in dollars anymore and they trade with gold? Well, that's going to eat up a lot of the supply out there. Now, will it happen? I have no idea. Will gold ever be confiscated again? I have no idea. But I do know that, if you look at it from a historical standpoint, it does provide insurance. Most importantly, it is a currency that is internationally known as a currency. Our fighter pilots carry gold in their flight suits in case they have to eject overseas, and they know that they can take that gold and get back to a friendly territory if they need to. They're not going to carry dollars. They're not going to carry euros. They're not going to carry dinars. They're going to carry gold because it's universally known as a currency that will get you to where you need to be.
Yeah. That's interesting. I did not know that. How about rare coins? Kind of give us a breakdown on that. What makes a coin rare and tradable, and what kind of coins does Blanchard and Company kind of deal in?
Sure. So it's an alternative asset. And if you go back to our initial part of our conversation, the reason why rare coins are valuable is because they all are pre-1933. So some of the coins that were supposed to be confiscated and melted down actually slipped through. Did they go to Europe? Did people put them in their top drawer and forget about them? The answer is yes, they did. And so these coins that are pre-1933 are rare. Number one, they'll never be produced again because you can't go back in time. But two, the supply was melted. So you and me and the listeners, and we would literally stand in line and take this 1796 silver or gold, whatever, and the value is it's insane, the value of these coins, and part of it is the supply. Part is the supply, and part of it is the condition. So we have coins that we've sold that are in excess of $10 million, and we have coins that we've sold that trade basically on the price of gold. And the allure of rare coins is that it is an alternative asset. So it performs when people feel wealthy and when there's inflation. There's no doubt that we have inflation right now, and people that invest in the stock market, well, they feel wealthy right now. So rare coins do perform, and we'll sell coins, and there's also the romantic side of rare coins. We've sold coins that came from George and Martha Washington's silver collection that they got when they were married, and they melted it down and created a coin, and we have sold that coin. There's a doubloon that's called the Brazier doubloon, and Brazier, who created it, was sitting on his porch at number 3 Cherry Street. And you know who lived at number 1? George Washington. And George Washington walked across the yard and said, "Hey, will you create a coin for me? Because with this new world over here, we need to have a currency system." And so you can imagine President Washington and Brazier literally playing heads or tails with this coin. So yeah. The stories are unique. The stories are, there's a lot of passion. It's a collectible asset. So people want to continue to build their collections. It's the equivalent of fine art or antique cars or wine or watches. Once you get the bug, you want to have the best collection that you can have. So when you go back to the diversification, so not only do our clients diversificate within the precious metals arena, we also discuss with them the benefits of having a small portion of that allocation in rare coins that often do not move with the price of gold and silver. They move with supply and demand, and they move with condition. I'm kind of getting the weeds here with rare coins, but rare coins are typically graded on a scale between 1 and 70, or 0 and 70, 70 being the greatest condition it can possibly be in. And typically our coins are ranked between 50 and 65, 66, a little bit higher than that. It's almost, it's impossible to have a coin that's been around for over 100 years being in a 70 condition, but some of them are up there. And they're absolutely beautiful pieces of art. There's a story behind every one of them, whether it's Wild Wild West, whether it's a shipwreck, whether it's Carson City, George Washington, silver. The stories are what sell rare coins, because it creates passion, and it's that romanticism that we get to tell the stories, and it puts a smile on my face every time. I said, look, these two people that Brazier and President Washington literally played heads and tails with this. Oh, and by the way, Alexander Hamilton was there as well. So you tell these stories, and it's almost impossible not to get excited about them. So that it's just another tangible asset, alternative investment to have in your portfolio that you can tell a story, but also it performs. Most importantly, it performs. The secondary is that it's a story. But you go to a cocktail party at your house and you whip these coins out and you start telling stories. Next thing you know, I get a phone call the next day saying, "Hey, I want the same thing." So it's a really neat experience to have our clients be as passionate about the coins as we are.
Yeah. How about, and so on gold, you mentioned shipwrecks and some other things. So gold is not one of the metals that has an issue with corrosion, that kind of thing. I mean, it literally had the ability to survive that kind of.
Yeah. So one of the most famous shipwrecks that we sell is the SS Central America. And it went down in 1857. And basically all the California gold rush, they took a ship down to the Panama Canal, and they literally, the Panama Canal didn't exist, but it was the smallest point from point A to point B. So they got it from one side of the Pacific to the other side, and then it started going up the coast to New York, and a hurricane came in and it sunk. And so for 100 and something years, it was down the bottom of the ocean. And Odyssey Marine was able to go down there with robots and literally with the suction cup grab each coin. And there were some monster bars that were down there as well. So the 1857 S $20 gold piece, which means a lot to me and maybe not to your listeners, but that's a gold coin that was minted in San Francisco, wound up at the bottom of the ocean, the Atlantic, and 150 years later, 200 years later, we're pulling it off, and now our clients own the substantial amount of those coins that were pulled up. And there are plenty of others that are out there, and but that is by far the biggest one. We sold these going back to those 1,000-ounce bars. As I won't say it's just a great story. So during World War II, His Majesty's Mint in Bombay, they pulled all the silver out. They stamped them, His Majesty's Mint Bombay, and the English government, or the British government, went from India on ships all the way around Africa, all the way up, in a German U-boat, or excuse me, a plane saw this ship, and a U-boat sunk it. And they brought these 70-pound, 1,000-ounce bars up from the ocean. There's 400 of them or so, and we sold just about every one of them to our clients. And with silver doing what it did, I think we sold them when there was $25, $28 an ounce, and now, it's $60 an ounce. And you throw in the romanticism and the story on top of that, they've done very well with those bars. But those stories are not unique to just shipwreck. It's every single coin that we sell has a story just like that.
Yeah, that's neat. That's really, really cool. And so primarily it's all 1933. So as far as the newer coins, are they mainly done with the design? Is that for authenticity and knowing that it is in fact going to be what it's said to be, more so than like, hey, this is such a unique coin that we anticipate it's going to go up in value more than just what the strike price of gold is?
So the pre-1933 coins, not only have the design and they have the supply and demand, and they have the basically the way that it looks, but the I guess in the 1970s, when the world mint started creating coins, it wasn't until 1986 that the United States government actually started creating their own gold coins. But basically, every mint around the world has its own unique stamp or their own unique die, and they create their own coins. And so you have like the Canadian maple and the Cougaran are the two most popular. And everybody knows the Cougar in South Africa and the Canadians and maple. They're both 1 ounce coins. They're both beautifully designed. But the most important thing for a new investor to know is that they're just an ounce of gold. It really doesn't matter what the design is on it. As long as it's an ounce of gold, you can look at what spot price is, and that's what the actual ounce of gold is. So whether it's a bar, whether it's from a European mint or a Panda from China or Philharmonic from Europe, maple, a Cougaran, or even an Eagle, as long as it has an ounce of gold in it, it's worth an ounce of gold. And that's it. Doesn't matter what the design is. That's more to beat their chest to say, I've got a better design than somebody else. But I will say, and I mentioned it before, that the 1 ounce gold American Eagles are the most popular. And one of the reasons you get that sense of confidence is that it is backed by the United States government. And I don't mean back like it's backstopped. I just mean that that the weight is going to be right. The content is going to be pure. And, your clients may have questions like, what about a 22 karat gold or 24 karat gold? Because they're used to dealing in jewelry. And for us, it doesn't matter the carats. It really just matters, is there an ounce of gold in it? So a Canadian maple is a 24 karat gold, beautiful coin, but it has less additives. So it's one of those things that I'm on the 23rd floor here. If I throw it off, by the time it hits the ground and I go down there, it's going to change shape because it's just pure gold. Whereas the gold American Eagle still has an ounce of gold in it, but it weighs a little bit more because there's more additives in it. So if I throw it off out my window and I go down and look at it, it will not change shape at all. So does it matter? No. It's all an ounce of gold. One coin may be heavier, but it has an ounce of gold in it, and the other additives don't make a material difference in the price.
Okay. And is that what, I'm glad you mentioned that. Is that the kind of the difference between the carats is just the purity of how much of that metal is in fact gold versus, mixed with some kind of additive?
Yeah, it's basically a percentage of gold in the coin, but it doesn't matter what the percentage is as long as there's an ounce of gold. I mean, typically a gold is, you kind of make an okay sign, and that's basically the size of an ounce of gold. But if you took your hands and made a circle, as long as there was an ounce of gold in there, it would be worth the same price as the smaller. So it doesn't matter what else is in it, as long as there's an ounce of gold. Doesn't matter what mint manufactured it. Doesn't matter what firm that created the gold bar, as long as it has the ounces that it says it has in it, then that's what we're buying and selling. We're not buying the additives. It's just an ounce of gold.
Okay. And then how about from a verification standpoint? How do you, how does one go about assuring that it is authentic, that it does have that ounce of gold versus, is that where they rely on a company like yours, to know that they're getting at the right source, or, what's the best way to go about, assuring that you don't get something that's counterfeit or that's gold plated versus,
It's a very good question, and it comes up for the comfort level because, again, you can get scammed out there. There's no question about it. But I think we'll circle back to the fact that we are a 50-year-old plus company. We certainly wouldn't still be in business if we were selling anything other than what we say we are. So if one of your listeners is looking to get into gold or silver, the important thing, whether it's Blanchard or a competitor of ours, make sure you know who you're dealing with. And there have been times where people bring us gold that they didn't buy from us, and we have to tell them, unfortunately, this is not real gold. So that confidence you have with buying and selling from Blanchard, you're going to know what you get. Everybody wants to scam everybody right now. So the most important thing is to deal with a reputable company one that's been in business for a long period of time. Just because gold goes up to 5,000, now all of a sudden there's some other people that just have pop-up tents that are looking to buy and sell gold. Don't use them. The premium that you're going to pay to buy gold from me versus somebody on the street corner is almost zero. So you get the confidence by buying from us. An ounce of gold is an ounce of gold. You can't trick somebody into a price. If they're selling it for $100 less than spot, there's a problem. If they're trying to sell it to you, $500 an ounce higher than spot price, that's a problem. So dealing with somebody like Blanchard, you can have the confidence that what we send you is authentic, it's real, and we will buy it back.
Yeah, that's great. Oh, this has been really interesting, David. I
Good, I'm glad
appreciate
to
it.
hear.
If you could tell everybody how they can find out more about Blanchard and Company, and if they'd like to inquire with you, if they'd like to reach out, where's the best place for them to go?
Yeah, so we have a team of portfolio managers that can help at least just have the initial conversation. The best thing to do is to look at blanchardgold.com, and you'll see our number there, 800-880-GOLD. But somebody that's going to answer, you're gonna talk to somebody that can help. We're not order takers. We're not operators. We really are financial portfolio managers that can help meet the goals. So the best thing to do is to check out our website at blanchardgold.com and see if there's anything that I missed, not telling your listeners, that gives a little bit more comfort, and then give us a call, because the most important thing is to talk to somebody. Yeah, you can buy online from us. We have every product, gold, silver, platinum, palladium, online. But I think the most important thing, and is almost the most uncomfortable thing at the same time, is to talk to somebody about it. Our guys are not threatening. They're not pressure. We're literally here for the last 50 years trying to figure out what the goals are of the client. And it may not be the same for everybody. And our guys have the expertise to try to figure that out. So you're going to talk to a person. That person's going to be assigned to you. They'll be your portfolio manager for the duration of not only the initial purchase, but all the way until you finally sell the final piece of gold that you bought from us. So I think it's really important to make sure that you call us. Find out anything you can on our website, but definitely call and speak to one of our team. I think it'll be very, very helpful.
Yeah, that's great. Thanks, David. Appreciate that. And we'll put a link in the show notes to all of that information. I've got two other questions that I ask every guest. One would just be any advice you would give somebody who's maybe just starting out in their investment journey.
If you're starting out, then the word diversification, and you wouldn't put all your money in Coke and Pepsi. You would diversify within the stock realm. And I think that what I would recommend from somebody that's getting started is to look at gold as a portfolio protector, an insurance policy. There's plenty of things out there that are going on that create instability, and gold is something that gives you that warm blanket feeling at night, knowing that you have it and hopefully you never need it. So that would be what I would first recommend. It's just a comfort level. How can you get comfortable buying an asset that you know little about? How can you get comfortable buying from somebody you don't really know? We do that every single day. So we are here to help.
Great. And then last question would just be a book recommendation. Doesn't have to be gold related or precious metals related. Certainly can be, but just something you've read that's been impactful.
Yeah. So James Blanchard, who founded this company, started the New Orleans Investment Conference years and years and years ago. And he's had number of speakers, Alan Greenspan, Milton Friedman, presidents, congressmen, and one person he had was Ayn Rand. And I'm sure your listeners know that author and the books. But one book that ties all of this together is a book called Anthem. And Anthem is a book about individuality versus collectivism. And James Blanchard actually named his firstborn child Anthem because of his relationship with Ayn Rand and coming to speak at the conference. So, some of these gold buyers can be a little out there, but I think that they all have one thing in common, and they're all trying to do what's best for themselves. And reading that book and realizing that every individual is unique and they have to do what's best for them. That's why we sell gold, because it is something that's best for the investor, but it's going to be unique on that person's individual goal. And so it's an interesting book. If you haven't read it, our founder named his firstborn after it. So it's got to be a pretty powerful book.
No, for sure. No, I love it. All right, I'll have to check that one up. That has not been recommended before, and I always ask for the audience, but I'm asking for myself as well to keep the Audible orders coming. So
good. Excellent.
Well, David, this has been great. Yeah, I really appreciate you being a guest on the Wealth Flow, and this has been a great show. Thank you.
Thanks for having me, Keith. I appreciate it.
All right. If you're still here, I assume that you found value in today's show and with the guests we interviewed. Please take a minute to subscribe and to review the show. It really helps. Also, wanted to remind you to check out Bobo Capital Ventures to get the first look at our 3 new cutting-edge, first-to-the-market investment opportunities. We have only about 15 spots for each fund for retail investors, and we would love more than anything else to have our audience be part of that group of limited partner investors. Thanks for listening to The Wealth Flow, and have a great day.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.